have to remember the stock market, and making money in the stock market is a skill. And for you to gain that skill, you have to make more trades. Don't go for perfection. Go for you knowing how to execute as much as you can, because excellence will come if you do it repeatedly. Hey guys, so this is Marvin Gurmo. If you're new to this YouTube channel, subscribe so you get updated on what's happening on the markets. You know, our goal here is to help you so that you can trade the markets with confidence, because at the end of the day, you will only win based on the strategy that you are using, based on the right principles that you are employing, and doing it with conviction. So I had an interview with Business World Bloomberg Philippines, where I had the chance to also talk about my view on what's happening to the markets. And I've been very consistent on the PSEI. You know that we've been sideways, meaning we've been consolidating. And for those who don't know the narrative for markets or stocks to go sideways, it's basically this: if a stock has gone up relatively fast compared to a certain period of time, that there's really nothing changing in its valuations and its fundamentals, that it has just gone up, stocks or markets in general would go sideways. And that's what happened to us at the early start of the year. You saw the market zoom up, but without any change in fundamentals, and people just bought us because when we were down, we were cheap. Now, suddenly the market started to go up without any fundamental shift in the value. With that being said, the market started to consolidate. So from January to where we are now, the market is still sideways. The market is not going anywhere yet, but we have been moving at a range of 7.5 to 8.1. So this will be interesting, because if the market starts to break out from at least the 8.1 level, then that's when you can actually say that, hey, there's now a semblance, there's a chance for the market to go much higher. But until that happens, I don't think the market will go anywhere. And you have to understand underlying news threats, that there's still threats from the trade war of US versus China. You have that underlying. Then the market, you have to understand the first quarter results, the earnings weren't as attractive. It wasn't so good. So if you are an investor with uncertainty overseas, there has to be a compelling reason that you want to invest in the local market. But if there's no compelling reason, no one will take the risk yet. You have to understand, at this point in time, we are still expensive. The PSEI, from where we are now, is expensive. No underlying story causing people to want to come in. With that being said, the only time we will have people, the markets will go higher, is when people will want, or investors would want to buy higher, meaning they see potential growth. With no growth in earnings, with the earnings not as attractive, you can't expect the market to really push up yet. So our goal is not to forecast, our goal is not to anticipate. What I do know is this: the 200-day moving average is bullish. It's just that it's not showing us any momentum upward. It's not showing us any push. The MACD is above zero, telling us that it's bullish. It's just that it still has not broken out of the 8,100 resistance. It has to break out of 8,100 for it to have a chance, a semblance to go up. So what does that mean? The market now is around, it closed at around 8,045, so it's nearing again the 8,100 level. So we have to understand, that we have to anticipate this, that should it not go up anymore over the next few days, it's normal, it's accepted. Why is it accepted? Because number one, it there's the resistance that's blocking it from going up. So your goal is to be strategic. If it doesn't break out, wait for it. We have the support level as close as we can, 7,500, and then there's another one at around 7,790. So you could pick your spots where you want to come in. You could pick your spots where it becomes cheap again. So your goal is to buy it strategically. Your goal is not to buy it every time you feel like buying it, because that's the best way to lose money. You will lose money if you just put in money every time you feel to put it in. So your goal, should it not break out, wait for it. wait for it to retrace, then wait for it as it hits that support level. This is especially applicable for people who have mutual funds, who are investing in ETFs, who are following the broad market as well. And if you even follow stocks that have a large part in the index from BDO, TES, and Prime Holdings, they are also in the resistance area. So your goal here, if you're not following the index, is to find stocks, pick stocks that are deviating from it. Because guess what, guys? There are a lot of stocks that are moving up. I've mentioned FEN on a previous video. I've been mentioning Holcim over and over. I have a video for Mega, I have a video for Ali. But there's so much from ICT to FLI to SLI to FDC and so much more. The point here is this: if you're not following the index, just look for stocks from a technical perspective that are deviating and are going up. But for this regard, if you are following the index, it's still 7,175 to 8,100 until we see something shift. The markets will just go in this function over the next few days, weeks, or months. And I'll just keep you updated, guys, for whatever happens here. I'll keep you posted on whatever data that we collect and we can see from this, because I really want you guys to prosper. I really want you guys to learn how to use the stock market to your advantage, because I really believe it's the great equalizer out there that whatever you are doing, whatever your profession is, whatever your business is, if you're a student, you're a mom, you're an OFW, anyone can trade the markets. You just have to devote the time and the effort to learn it and to choose to actually learn it. And in spite of failures, that you will push on and push forward. You have to remember the stock market and making money in the stock market is a skill. And for you to gain that skill, you have to make more trades. Don't go for perfection. Go for you knowing how to execute as much as you can, because excellence will come if you do it repeatedly. At the start, no, don't go for quality trades, go for quantity trades, because I'd rather that you have 100 trades, making mistakes in a lot of them, but learning and tweaking, so that later on when the money's bigger, when there's more on the line, the skill and the experience is there. But not just that, the conviction is also there as well. So that's it for now. I hope you guys learned a lot from these videos. Comment, subscribe, so you get updated on the latest on all of this. I hope this video helps you, pushes you to trade well, trade strong, trade smart. Marvin Gurmo. See you all again soon, guys, and God bless you all.